Thanks so much for your company. I am Pius Kojobaka, and looking at our stories. For the first time in several weeks, the Ghana Cedi depreciated week on week against the US dollar and other major foreign currencies in the retail market. The local currency lost 3.52% against the dollar last week, 2.01% to the pound, and 3.08% to the euro. More in this report for you.
Cedi traded at a mid-rate of 11 Cedi 75 pesos against the American greenback. The weak performance of the Cedi in the retail market last week was due to elevated demand pressures in the forex market. However, the local unit strengthened slightly against the US dollar in the interbank market, appreciating by a modest 0.29% to close at a mid-rate of 10 Cedis 25 pesos to a dollar. Databank Research believes the softer than expected May 2025 US labor data weighed on the dollar across major pairs, driving a modest Cedi gain on the interbank market. However, it pointed out that although renewed trade negotiations and tempered dollar sentiment may anchor Cedi stability in the interbank market, intensifying forex demand from repatriation-related outflows is expected to exert pressure in the retail market. This could constrain broad-based Cedi gains in the near term, despite relatively subdued sentiment in anticipation of the $370 million International Monetary Fund disbursement.
All right, let's analyze this further. Joining us via Zoom is Manager of Macroeconomic Research at Ghana Commercial Bank PLC, Courage Buti. Thank you so much, Courage, for agreeing to speak to us, and good to see you. Now, first off, what do you make of the current development at the Forex Bureau market when it comes to the Cedi's performance? 11 Cedis 60 pesos, we are learning to the dollar.
Oh, yes. Good evening, and good evening to your listeners. I think we all agree that the run of appreciation wasn't going to last forever. And I don't think what is happening is out of the ordinary. It is really the normal dynamics of the market. Demand supply interplay. At a point, Cedi was 17 Cedi to a dollar. We ended last year with around 14, I think, 0.8 thereabout. And it has corrected sharply to this level. When it's correcting, you saw people lose money, speculators, people who had dollars. They tried to sell to probably cut their losses and all that. Now it's expected that the normal J-curve effect will happen right after it bottoms out, stabilizes around 10.24 thereabout for a few days or so. You would begin to see people try to test the result. How strong is the appreciation? How strong is this resilience? They want to test it for, and it's a normal market dynamics really. Now, the question is, if they test it and the interventions that brought it to this level is not sustainable, then you begin to see clawback to levels that you do not desire. If the liquidity intervention or the reserve levels are not encouraging, if the policy foundations are not strong, if the market sentiments are not as anchored, then you begin to see a reversal in very sharp levels. But what we are seeing now from, I think, a bottom of around 10.24, 25 thereabout, depending on which rate you are looking under the market, because the retail rate never really got to 10.24. So if you look at that, then you are looking at 10.7 as we speak and going into towards the 11s. I think it's a normal dynamic given the pace at which it came down. And then it would have to do that until it finds a level where it is stable and you are not seeing very significant movements. So for me, what is happening is to be expected. I don't think it's anything out of the ordinary.
So it's one of those blips on the Forex market?
Definitely, in my view.
All right. So do you find it interesting that on the interbank market, for example, the Cedi is doing well, but when it comes to the Forex market, it is struggling?
So the interbank market is for the banks. Currently, banks are awash with liquidity, right? In fact, dollar liquidity. So most of them are looking for places to even place them, either through some investment, encouraging some dollar loans. And your, if you like, corresponding banking relationships are not very keen on holding dollar for you at this point. So there are limited options to do. So banks essentially will not be actively seeking to trade among themselves for FX. Each one of them have enough. And so if you see rates going down on the interbank market, it's a reflection of that. Demand supply interplay. And if the supply is overwhelming and demand is not so much there, you see prices fall. And that is what the dynamics are. What is happening on the retail segment of the market? which is where you are seeing the slight movement, is that those speculators, those people who want to test the waters, that is where they play, right? And so after a run, a spate of appreciation, and then now there's a sense of stability, you give it a few days, you want to see, is this really rally, really strong enough? Could they reverse? So if I have some demand, you want to put it in there and see what the rates will look like. And that could create a spin if maybe 2, 3, 4 days, 5 days of trying that yield result. Then it will create a spin where there will be a whole run of reversal. I don't think that is what is happening. So that usual movement from around 10.6, 10.5 on the retail market now to 10.7, 10.8 approaching 11. If you look at, you are seeing daily appreciation of 50 pesos, 40 pesos, and now within 2-3 days, you are seeing maybe an upward movement of about 20 or 10 pesos, 20 pesos about. I think it's a normal movement given the pace we saw it come down. Now, if after observing a week 2, you are seeing rate go back into maybe 11.50, into 12, going into 13, then you will know that probably we are in trouble. But that's the case now. I think it is the normal activity of the market, and you expect not stability at a rate, but some movement around a certain, if you like, medium rate, or if you like, middle rate. And if those movements are not too pronounced, it shouldn't be too much of a concern. And that is exactly what I see happening. Right. The movements are there, but not very pronounced, and it's around a certain central figure. And so I think it's a normal interplay of the market until the market finds a level it's comfortable with.
And for how long will the market find that level of profitability, really?
To be fair, my revised projection of exchange rate by end of year is 12 Cedi 10 pesos. In fact, 12 Cedi 70 pesos was my revised forecast, but within a band of 50 pesos. So it could come as low, 70 pesos, I mean. So it could come as low as 12 Cedi 10 pesos or go to even 13 Cedi, if you like, 50 thereabout pesos. So that is the band I'm looking at it. And I think at the current levels and how it's playing, and knowing what we know about the fundamentals of the economy now, the reserve levels, the monetary stance, and how cautious it is and trying to re-anchor inflation expectations and general prices. You look at the fiscal stance, yes, and there is a twist to, I dare say there is maybe an explanation to the imposition of even the petroleum revenue tax that is generating conversation, really. If you look at it, the exchange rate appreciation led to the government has a certain benchmark oil revenue in the budget against which they project what the ABFA will look like. Now, oil prices falling on the global market, Cedi is also appreciating. So your revenues from the oil taxes are falling short, and your benchmark revenue from ABFA is also falling short because of the dynamics on the market.
Very well.
So the imposition of that tax is trying to plug that revenue gap. And so if you see fiscal policy responding to some of the shocks that are coming in, and a monetary policy is also accommodating or trying to be cautious, then the policy stance is right to anchor the Cedi's position. And that is what I believe will ultimately play the game going forward. So for this year, I'm not too worried about Cedi. I think largely will fall within that forecast band that I put across.
Very well.
And
Thank you so much.
See movement here.
Manager, Macroeconomic Research, GCB Bank, PLC. Courage Boti, I truly appreciate your time speaking to me here on Business Live. Now to one of our lead stories, the Finance Ministry is warning that yielding to all demands from registered nurses will put government spending for this year under serious pressure. This, the ministry says, may even affect critical spending for other sectors of the economy in the coming months. Deputy Minister for Finance, Thomas Nyako Ampem, disclosed this at a joint news conference on the strike by registered nurses in the country at the Jubilee House today.
To balance everything and ensure that the economy is not thrown out of gear. We have a lot of debt that we need to, we have been confronted with. And so, in as much as I appreciate what our nurses do and what they are demanding, we also want them to have faith in the current administration that we mean well, and we are committed to ensure that we have a fair wage for what they do for all of us. And so let us not describe their action in any way that will mar our attempt to resolve this issue.
All right, let's engage the thoughts of an economist on the back of these concerns. Professor Patrick Isuming joins us via Zoom. Pleasure you could join us on Business Live. Now, do you think public sector workers are demanding too much that could throw government expenditure out of control?
Good evening and good evening to viewers. I don't know about too much. I think that when you have to determine whether what somebody is demanding is too much, you have to look at their relative contribution. So if they are bringing in as much as they are requesting, then you can't classify what they are requesting as too much. I do think that, everything sits in relative terms. When it comes to wage negotiations, everything sits relative. You will notice that every time I've heard their leaders speak, they always relate to other unions and what others are getting. And that's really what you expect. Wages are primarily, when it comes to wages negotiation, relative positions matter. So they will look at this and they will say, well, this is what others in our sector are receiving. And therefore, if the state can afford that, they should be able to also afford this. But I think we have to understand that the number of nurses are relatively more than maybe other unions within the sector. So I think it's, I thought that these are some of the issues that the single spine was supposed to correct so that we're able to clearly quantify the payment due for each kind of service and pay accordingly. So I do not necessarily think that it's too much, because I don't really know the overall effect on the budget size. But I do think that, its fiscal implication might be significant.
I'll come to that significant part. But the question on the minds of many really is that how does government contain expenditure and at the same time compensate public sector workers adequately?
I think one of the issues that have happened in the past is, so there are issues about transparency and issues about equity within the distribution of the public sector pay. I think that's one of the major problems, because when you look at the size of the pie, people will say it's so much, but when you look at, for instance, what Article 71 office holders are entitled to and what others who are not Article 71 are entitled to, if the nurses see that others with similar qualifications in other spheres are getting way more, then you struggle to tell them that they shouldn't be getting that. They will look at what they do and how essential their work is, and then they will complain. So I think the major problem has to do with the distribution among the public sector workers and the fact that there are different categories of workers that earn so much and then others are not. So I think that's what the problem is. I'm not sure that, the government would have looked within its planned expenditure for the year and would be able to, and would have considered that this is something it can afford. But I think every time workers see, they see what others in the public sector, we have the same employer and this is what others are getting. They look at their qualification and the volume of work and they see that, no, these people are getting more, then it becomes harder for government to convince them otherwise.
Really, do you hold the view that government must itself demonstrate fiscal discipline to win the confidence of labor that it will not overspend as government is envisaging to do?
That certainly plays a role. I think when the public sees how, how political office holders are remunerated or how they spend, and they see there's a better tightening, it makes it easier for the government to negotiate in terms of moderation in wage increment. So I think, but if we talk, government is a continuum, but the current government obviously is charting a slightly different course. We've seen how tight the 2025 budget is. But note that this was based on something that had been negotiated in the past. If we are looking at the spending trajectory of the current government, at the moment, you can't say that we've seen any proliferate spending or there's excessive spending by political actors to generate that kind of agitation.
All right, we'll leave the conversation here and, of course, follow subsequently as and when development unfolds in that sector. Economist Patrick Isuming, thank you so much. Professor Patrick Isuming, I truly appreciate your time speaking to us here on Business Live. This is still Business Live. We have more for you shortly. Hello again. The Minister of Communication, Digital Technology and Innovation, Samuel Nati George, has announced increases in data bundle allocations across all telecommunication networks in Ghana effective July 1. The minister revealed these changes during a press conference in Accra today.
At this juncture, I am pleased to announce that my engagement with the CEOs have resulted in the following specific measures which are to take effect from Tuesday, 1st of July, 2025. Airtel Tigo Ghana, AT Ghana. A 10% increase in all data bundles currently offered by the network. Additionally, the 400 Ghana Cedi bundle, which currently offers 195 gigabytes of data, will now offer 236 gigabytes of data. Ghana Telecommunications Company Limited, Telecel. Also a 10% increase in all data bundles currently offered by the network. Their 400 Ghana Cedi bundle, which currently offers 90 gigabytes, will offer 250 gigabytes from 1st of July. Scancom Ghana Limited, MTN. A 15% increase in all data bundles currently offered by the network. And I'm pleased to announce the restoration of the 399 Ghana Cedi bundle, which currently has been changed to the 350 Cedi bundle that offers 92.88 gig, will henceforth be reinstated to 214 gig for 399 Ghana cedis. I am aware these increases are going to come at considerable cost to the network operators. However, I am glad that our engagements and the consultations are bearing fruit for the Ghanaian people.
And to some other stories, Ghana's insurance industry is losing millions in capital outflows due to heavy reliance on foreign reinsurers. Now, that's according to the 2025 Insurance Sector Strengthening Strategy Report. Here's more.
One of the report's central concerns is the negative claims experienced among policyholders, which continues to erode confidence in the industry. Many customers remain dissatisfied with the claim settlement process, citing delays and inefficiencies. Compounded by the inflation and rising vehicle repair costs, the report notes that a 10% increase in third-party motor insurance premiums, along with a 33% rise in cover costs, raising the stakes for both insurers and policyholders. Another major concern is the sector's over-reliance on foreign insurers, which has resulted in significant capital outflows. Between 2016 and 2019, reinsurance premiums sent abroad surged by nearly 400%, weakening the industry's ability to retain risks and reinvest funds locally. While the National Insurance Commission has mandated that insurers exhaust local reinsurance capacity before turning to foreign options, local underwriting limitations remain a challenge. The report pegs current retention ratios at 96.36% for life and 70% for non-life companies, highlighting the opportunity to strengthen local risk management capacity.
The Ghana Chamber of Mines has officially unveiled its new Chief Executive Officer, Engineer Dr. Ken Ashigbe, as the organization charts a renewed course in its mission for sustainable mining. Speaking at a press conference in Accra, Chief Executive Officer of the Chamber, Dr. Ken Ashigbe, reaffirmed his commitment to championing responsible mining across the country.
Transition from telecoms to mines. So it's important to state that the two entities are all private member organizations. The Ghana Chamber of Mines is not a state entity. And so I just would want to state that Ahmed has not been appointed with presidential powers from Jubilee House. Neither have I also been appointed. We work closely with government with the policymakers, with the regulators, but all in the interest of pushing the mining industry. As the interesting thing is that if you look at the objectives of the chamber itself, it stands for responsible transgenerational mining. And so it is important for the chamber to ensure that just as the chamber has done in terms of being very responsive in its mining, ensuring that areas that we mine, when we leave, the environment is restored. The members of the Chamber of Mine tend to also be at the receiving end of some of the irresponsibility and the illegal mining activities. And so there's an alignment between the chamber itself and ensuring that Ghana mines sustainably. And so I'm not too sure that much is going to change. I'm just hoping that my colleagues on the Ghana Coalition Against Galamsey would also step up to the plate and take some of the responsibilities. But again, there's a very, very clear alignment between, us, a chamber, ensuring that mining is synonymous to responsibility and sustainability. And so I'm not too sure much would change in that endeavor. The only thing that you might see happen a lot more is by virtue of the opportunities given to me, a lot of the engagement with the major stakeholders, using the vehicle of the chamber would be enhanced. So if anything at all, I'm hoping that we would be in a better position to be able to improve our sustainable and green mining initiatives.
All right, let's go to myjoyonline.com/business for some quick reads on that portal. Ghana to miss cocoa production target in 2024-2025 crop season. That's according to the CEO of Cocoa Board, Dr. Randy Abbey. Also on that portal, government announces major data bundle increases across all networks from July 1. And we brought you that story here on Business Live. You can get more stories when you log on to myjoyonline.com/business. I am Pius Kojobaka, always a delight serving you. See you at 8 p.m. with Prime Business.